Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading view with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which clearly is still in a monthly uptrend. We can notice how the market has been creating a series of monthly higher highs and higher lows, continuing higher, and every single time the market has created a new higher low, it immediately created a huge impulse to the upside. The last impulse to the upside was this one here, and right now the market is following with yet another correction. So it seems, at least for the moment, that the market has the possibility of creating another higher low and then continuing higher. Now, all this uptrend and rejection to the upside is coming away from a strong historical structured zone. This level here held as resistance for many years. It was acting as previous resistance, preceding these rejections to the downside. Then the market broke above the zone with this impulse, and at that point, all that previous resistance was turned support here. The market tested the area, respected it as support, and immediately the market started rejecting to the upside. Now, let's keep all of this in mind and drop down on the weekly time frame to see what kind of structure and price action we currently have. Now, also here on the weekly, things are very clear. We can notice a massive impulse to the upside, followed by a consolidation area in the form of this triangle formation. And essentially, when you have a triangle formation, that is when you have the creation of lower highs and higher lows at the same time. And then we had the breakout to the upside. Now, this is a very popular pattern, and that is exactly what you would expect in a situation like this, because if you have a strong impulse and then the market starts to consolidate in a triangle formation or wedge, at that point, what you expect is the next breakout to the upside, which is in fact exactly what the market did. So also here on the weekly, things look quite clear. We can notice that we also have a clear uptrend from a weekly perspective. We can notice how the market has created higher highs and now higher lows at the exact same levels. We have the possibility here of creating another higher low and then continuing also with the weekly uptrend as well as with the monthly uptrend as we have previously identified. Now, let's keep all of this in mind and drop down on the daily time frame. From a daily perspective, the situation is very clear. We can notice how the market has just printed this M pattern, and this comes with a huge rejection away from a level that we already wanted to see this market reject. In fact, I spoke about gold just a few days ago when the market was around this area and explained all the reasons for which I expected from here to see the market create this rejection to the downside, which the market now gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, at the moment, what we can notice is that the market has just created this M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern at the neckline. So considering that this is also previous resistance turn support, there is the possibility that we will see some institutional longing inside of this area, which at that point could make this market reverse to the upside. Speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing and how they're moving and shifting their orders, what we have here, if we look at the data for gold, which keep in mind that is already gold USD because all currencies on the spot are traded against the USD, and we check what institutions are doing lately, What we can notice is that lately institutions have been decreasing their net positions. We went from 257.9k net positions all the way down to 238k net positions, and this shows how institutions are starting to move again back to the bearish side for the gold in the short term, increasing their shorts, which went from 60k to 89k, and at the same time, longs are more or less remaining the same. We see a slight increase in the last 4 reports if we look here from the low. So in the short term, institutions were expecting a correction, which is in fact what we now got. In fact, we already noticed that institutions were shorting gold around this area, and that is why also I was expecting this rejection to the downside from the previous analysis. But we have to keep in mind that in the long term, institutions are still massively bullish on gold. We're sitting with 327,000 longs compared to only 89,000 shorts. In the long run, net positions have risen if we look at the overall movement, more or less from levels like this. In fact, if we look in the past, when we were at 234k, this was the lowest that institutions usually went before then starting to increase once again. So we're sitting pretty much close to the previous turning points where institutions stopped looking for short-term corrections and again went back to the long-term bullish positioning. So there is the possibility that, especially if we will stay inside of these levels a bit more, we could start to see again institutional longing. So it's important to see what will happen with the new report, because already we see 11,000 longs added again with the new report, while with the previous one, institutions closed 5,000 shorts. 5,000 longs. So with the previous report, institutions had closed longs and opened shorts. Now they're opening longs. They also open shorts, but they're already opening longs as well, starting to again increase their longs, which went from 316k all the way up to 327k. So institutions seem again ready to move back to the bullish side for gold, which could easily trigger a potential rejection to the upside. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked as well in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COD data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COD data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates. and I will see you in my next video.